It's not important until it's one of the only things that's important, the only thing you can think about. If you have unfunded financial goals, then you need life insurance. How much do you need is the question. I've got 2 ways that you can figure that out. I've got that and more coming up. It's not a popular topic to talk about, let alone think about, and yet it's critically important. So as with everything on the Wise Money Show channel, not creating this content just to get views or maximize views and subscribers. I hope so. I hope you find it beneficial and that you hit that subscribe button and that you share it. But life insurance, when we talk about life insurance and managing this risk, it typically doesn't get a lot of views, doesn't inspire a lot of new viewers, and yet it is so critical. I just need to keep talking about it, and not all the time. I don't want to overdo it, but I do want to stress the importance of it. And for this topic today, it's really, well, how do you know the right amount of life insurance to have? Now, you need to have the right type, right? That's kind of priority number 1. But then after you know the right type, the right amount. I shared with you, on this channel maybe 2 years ago, almost, I had a health scare. And there was a moment where it was like, well, I hadn't reviewed my life insurance in a while. As a financial planner, just going to be honest. I mean, it's sort of cobbler's kids without shoes. It's not exactly the case, but it's easy to ignore the rhythms that we help our clients achieve and the disciplines and the structure. And so, yes, did I have a lot of life insurance in place? Absolutely. But when I got that diagnosis, it just stopped me in my tracks. And I analyzed the life insurance that we had. And guys, I realized we didn't have enough. We didn't have enough. And if the diagnosis resulted in what, likely the eventual conclusion, it wasn't going to be enough. And thankfully, and it's just blessed, very, very fortunate that the medical tests and so on led to, no, Mike, it looks like right now you're going to be okay. And I was able to quickly, as soon as I got the okay and the all clear, I was quickly able, I added another life insurance policy, not out of emotion, and although it's easy to make those emotional decisions, but really out of the analysis that I'm about to share with you right now. So how do you know how much life insurance you need? Now, I believe that Cindy and I have a temporary life insurance need. We still need to figure out long-term care insurance, and I shared that there are hybrid tools out there that we're exploring, so this may change. But all of our insurance has been term and return of premium term insurance. And so therefore, how do you know the right amount? Once you have the right type, how do you know the right amount? Well, there's an ideal way, and then there's sort of like plan B, and I'm accepting it, even though it's not a real plan and has considerable flaws to it. But if you don't want to go through the process of plan A, then there's plan B. Of course, I'm going to hit plan A. This is, to us, this is the way to determine how much life insurance you need, and that is to do a life insurance needs analysis. Every time we talk about life insurance, I'm going to say it's there to fund unfunded goals. And that's the reality. Because if all of your financial goals are funded, do you need life insurance? No, you actually don't. But if you still have a mortgage, if you've got dependent children or someone dependent on your income, that we often don't say, like meeting putting food on the table, meeting the day-to-day needs of the family. That's often an unstated financial goal, but it's obviously a financial goal. If you want to help kids with college, with their education, that's a goal. Save up for retirement, that's a goal. Like, there's a lot of financial goals out there. And if all of a sudden you passed away and your income went away with you, do you have unfunded financial goals? If so, I've got a very nerdy, unemotional, but very nerdy answer for you. You can quantify how much life insurance you need. In that same 5-factor retirement plan that we talk about, that kind of builds that plan for your retirement, right? Age you want to be done, what your retirement spending is, what your retirement income sources will be, how much you have saved up, and how much investment risk you're comfortable taking. Those same 5 factors from wherever you're at, age 30, 35, 40, 45, 50, wherever you're at, that same 5-factor, you can then build in a, what if I passed away today? And again, not fun to talk about, let alone listen to, but you can build out that same analysis And then, but what if I pass away? Because in that same analysis, your CFP is going to know your unfunded goals. Oh, well, along the way, you were hoping to fund college for the kids and you're trying to pay this mortgage off and blah, 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 right? And so you're able to analyze, well, what would it look like if you passed away today and that income was gone? And your CFP can build out the essential ingredients. Well, we've got to replace this level of income because there's this level of spending, plus there's this level of savings goals. We've got to pay the mortgage off, and can build out that math to that needs analysis to determine, all right, well, how much life insurance would need to be plugged into your financial life on that event when you pass away in order for the rest of your financial life to continue to work. Now, you might say, when we bring this up, sometimes people say, well, wait a second. If I pass away, I don't want to fund this enormous, retirement for if I'm not going to be around, like I don't want to pay extra for life insurance just to, have a retirement full of all these extravagances. No. That doesn't need to be the case. In fact, I don't really see anyone build that case out. It's sort of like what financially would need to happen in order for life to continue to operate functionally. So in that 5-factor retirement plan, all right, well, we've got $2 million of life insurance. And if your income stopped and $2 million was injected into your finances, you can build out the rest of that kind of plan, that long-term plan, to see, well, does everything work? And if it doesn't, well, would an extra, right? And you can do the analysis and solve for, well, how much life insurance is needed. Now, that life insurance needs analysis may reveal, yep, you need X amount of life insurance. But in working with your CFP, you might say, well, all right, well, what would it look like two years later, 3 years later? Are we near an inflection point where we'd get a step down on the amount of life insurance that we would need? And therefore, should we ladder our policies or should we live with a little bit of risk? But that life insurance needs analysis, where you're analyzing your unfunded financial goals and getting the right amount of life insurance so that you fund those, that is the preferred way to analyze how much life insurance you need. Now, Plan B is the quick and dirty way to at least not just throw a number at the wall. Like, this is an enormous mistake that people make when they get life insurance. They think, well, I've got some through work, so therefore I check that box. I've got some life insurance, therefore I check the box. Guys, that is not the case. Trust me, you get that diagnosis, that pit of the stomach feeling, and you immediately realize, oh, I didn't follow the right process. I don't want that for you. So ideally, you followed that needs analysis approach. But if you said, that's too thorough, Mike, I don't really want to go through that work, then Plan B, and you'll be able to see the flaws immediately, is a multiple of income. It's a multiple of income, and it's typically 7 to 10 times your income. That's the amount of life insurance that you need, okay? That's the amount of life insurance. Now, you can clearly see the flaws because, say, 10 times your income right now, well, if you don't have any kids, do you really need that much? If you don't have a mortgage and you're in the house that you plan to be in for a long time, do you really need that much? If you're near retirement, and this is the big flaw. If you're near retirement, likely your income's the highest it's ever been, and yet you're at the point where you've got the most saved up for retirement. You might be fully, financially independent at that point. But just a multiple of income says, oh, you need a multiple of income. And so there's huge flaws in this, but it's much better than saying, well, I've just got a little bit of life insurance through work, so I'm good. No. If you want to figure out the right amount of life insurance to have, do a full life insurance needs analysis working with your CFP. If that exercise sounds awful, but you want to at least get close to what might be the right amount, 7 to 10 times your income. Don't forget, not all life insurance is the same. There are different types, temporary and permanent, and then there are subcategories beneath that. You got to make sure that you get the right type of life insurance and the right amount. Work with your CFP on that. If you don't have a CFP on your team, contact one on my team. You can find us online, wisemoneyshow.com or Korhorn.com. That's Korhorn with a K, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.